Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully all of you have had a very beautiful weekend so far. Now, in terms of the options, guys, all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. It's a very easy strategy to run, whether you're a beginner, intermediate, or even advanced investors. Provides us some great income and can provide an opportunity to pick up some of your favorite stocks at a discount while getting paid for it. Now, in terms of what we're going to do in today's video, guys, very simply, number one, we're going to go over the setup for the week. How are we shaping up in the technicals on our indexes? And also, do we have any big macro events or any big earnings to watch out for? Thereafter, we're going to go through a few of the strategy rules that I look for when I'm shopping for my favorite put options to write on my favorite stocks. And then thereafter, guys, of course, we're going to jump into the top 5 options plays. And as per usual, I have a bunch of bonus plays for you guys as well. In terms of the last week performance, guys, once again, we pretty much went perfect on the wheel strategy. All of the plays that we chose to write were pretty much ending up worthless or in profits, so big wins there. And some of the plays that we were in got assigned, we were able to get out of the very following week with some very juicy ROIs in the process. So guys, let's jump right into the action, shall we? So in terms of the expectation for the week, well, we know that the bulls are in full control right now on all major indexes, especially when you measure it by the higher time frames. The weekly is a very nice uptrend, sustained uptrend by the bulls on the S&P right now, as you can see, and on the QQQs as well. So I don't think that there's any major red flags because we have created a lot of space from some of the major drawdown levels, right? Keeping a special attention on the Qs 494 for a breakdown below. That would be daily downtrend, and that would be just further weekly consolidation. And in terms of the SPY, same concept as well. Keep an eye on your daily higher lows, guys. 584. If you get a break to that to the downside, you can expect us to go a little bit lower, but the bulls still control the higher time frames, guys. Much space allowed for the bulls to draw down over the course of this week. I'm not expecting any big days this week, guys, simply because it's Thanksgiving week as a whole. Usually in the markets, the week of Thanksgiving and the week of Christmas are a little bit slow, not that much institutional volume to be had. And we do have a kind of a shortened week, right? Trading day on the Thursday will be off completely, so no market action on the Thursday. And Friday, trading does resume, but only half of the day. It ends at about 1 p.m. Eastern Standard Time. So I do not think if we have any major breaks to the downside, I don't think that they're going to come this week. I could obviously be wrong, but usually in the low volume weeks, such as this week and the shortened trading weeks, those are usually not the weeks where you're expecting any major breaks of the levels. So you could be expecting a fairly decent week in terms of being able to write some premium on your favorite stocks. Now, in terms of the macro events, guys, there's really not much this week, to be quite honest with you. We get the FOMC minutes on the Tuesday, but that's just a recap of what Jerome Powell was saying in the FOMC interest rate decision meeting just a few short weeks ago. We also get the PCE inflation numbers on the Wednesday. Not expecting much of a surprise there because Jerome Powell actually gave us these numbers 2 weeks ago, and he said that inflation is still on the correct downtrending pattern right now, and we should not be expecting anything crazy here. Same thing for GDP. We get a GDP report, but once again, this is just a revision of the exact same GDP report we got last month, so not expecting anything major in terms of news catalysts for the week. And in terms of earnings, well, the biggest day, of course, is going to be on the Tuesday session. We do have some fairly large companies reporting, such as the names of CrowdStrike and Workday and Autodesk, so those will be interesting, but I don't think there's much on in terms of the weekly earnings here that can really move the markets in a substantial way, but could be interesting to play these companies after their earnings in the event that they do drop. So that's pretty much the setup for the week, guys. Should be a fairly smooth week, low volume week. So I'll be doing my best on the Monday morning session. If we get any red, I will be going shopping quickly because we get an extra day of theta decay this week for free. Thursday's closed, so that is a free day of theta decay. So I'll be looking to write my put options aggressively on the Monday and Tuesday morning to get that free day of time decay on the Thursday and even the Friday afternoon after 1 p.m., right? So that being said, guys, now that that's out of the way, let's jump into a few of these strategy rules, and I'll be blitzing through them this time around. I know I've been saying I'll be getting through these quicker and quicker. I still spend 6, 7, 8 minutes on them, but now we're really going to cut it down, guys, because I have a 30-minute full video on the channel. If you haven't seen the full video on the put wheel strategy. I will leave it down below in the description. It goes over the strategy in detail, how I choose my stocks for writing puts, how I choose my strike prices, all of that good stuff. It's down below in the description in the 35 minute video. For now, we're just going to be doing a very quick recap of these rules, right? So number one, you want to build a watch list. First thing I do on the Monday or Tuesday session, I build a watch list of all my favorite companies, and then I filter by red, and I'll only be interested in writing puts on companies that are red, provided that they do respect the rest of our criteria. But this is really step number one. Now, number two, we want to be writing puts on a solid company. High conviction companies for you only, guys. Last thing you want is getting trapped in a company that you don't know much about, that you don't have high conviction in. It's just not the best to manage a position thereafter, right? Number two, we want to be looking for stocks in a monthly uptrend or a very long-term range. Once again, this adds to the probabilities of us not being assigned because the long-term bulls are acting in our favor. Number three, the company needs to not have any earnings this week. Earnings are very volatile. You guys have seen it before. Companies can come out with good earnings and somehow still go down 10-15%. So if you want to be safe, just don't write any puts on companies that have earnings this week. Number four, we're looking for companies in an area of support or a breakout retest. I'll pull up the Autodesk chart. So a big area of support measured on a weekly time frame basis will be a lower area like this on Autodesk. Fairly obvious, right? Support area. The breakout retest is a little bit different. You have a higher end range of resistance here. Then you break it to the upside, retest, and then run. This retest area is usually a very high probability, especially when you break out of a long-term range. So all of my put option plays, guys, are going to fit one of those two things, either a long-term support area or a breakout retest trade. Now, number five, you want to be writing at or lower than the expected move. If you don't know what the expected move of a stock is in a given week, just go here, optionsai.com. Type it into Google, Options AI expected move. You'll come to this page right here. It's free. You don't need to create an account or nothing like that. And we want to look at the expected move and always be writing below the expected move. Because if a stock comes down really fast early on in the week, down into the expected move or below, usually later on in the week, you get a little bit of mean reversion and snaps the price back up within the expected move. So if we're always writing below, usually we have some good odds of not being assigned. Now, the following point, we want to be writing on a red or flat day. It goes in line with the point that I just said, right? Stands to argue if you're looking to write below the expected move, well, if the stock goes up 3-4% on the Monday, you're not going to have much of premium at all down here. And the last thing we want to do is chase stocks to the upside, right? So we always want to be writing on a red or flat day, which is why I filter my watch list by red stocks on the Monday or Tuesday morning. Thereafter, we're going to be looking for 0.5% to 0.75% in weekly premium, guys. This is your ROI. And in my roughly 6-7 years at this point of trading this strategy, this is the sweet spot. I know a lot of people like to use deltas, but the problem with deltas is that depending on the stock's implied volatility and the stock's expected move, you can get varying amounts of delta depending on what stock you're looking at. So rather than telling you guys only go for 15 deltas, only go for 20 deltas, it'll move. The one thing that does not move and that encompasses those changes in delta, regardless of the stock you're looking at, is this rule right here. We want to be looking for 0.5% to 0.75%. What does that mean? Well, it just means that when I'm looking for, let's say I want to write some Google stock, right? We know that Google is in a decent little area and they have been selling off recently because of the DOJ news, of course, right? Now, if I'm looking for Google, looking for it down here, let's say I want to go for the 160s. If I want to know if there's enough premium at the 160s, I go down to the 160s and I look for 0.5%. 0.5%, guys, mental math, really easy. Divide the strike price by 2, and that's the amount of money you need to see on the bid. If you don't believe me, I'll do the math right in front of you right now. You'd be looking for 160 divided by 2, which is 80 cents. 80 cents divided by 160 is, boom, 0.5%. So it's a very easy mental way of going through tons of options chains really quickly and not having to look for delta numbers or anything like that. The 0.5% rule adjusts for different deltas depending on different stocks' implied volatilities and stuff like that. So as you can see right here, there is not the required premium at the 160s yet, only at the 162.5s or above the 0.5% rule. So that's pretty much everything for the ROI. It provides the best trade-off, in my opinion, between the risk of assignment and also making decent money while writing puts. And yes, even though I write weekly puts, guys, you can extend this to 3 weeks out, 4 weeks out, 5 weeks out. Just make sure that if you do go on the extended basis, try to get as close as possible to 0.5% per week, right? So if you're writing 4-week put options, we'll try to find at least 2%, which is 0.5 times 4, right? And lastly, you want to set a take profit order at 90% of the contract value if you write a put on a Monday morning session. And by the Tuesday session, the stock rallies and you're now 90% profitable. Why would you hold the contract until the Friday session? It doesn't make sense. You may as well just close the contract and go shopping for something new to make sure you're allocating your capital efficiently. And thereafter, lastly, if you are assigned, you want to be writing some covered calls. As you see, I got assigned, we wrote some covered calls and got called away immediately. So in the event you do get assigned, the same rules apply. You'll be looking for covered calls between 0.5% to 1% in weekly premium ROI. And we want to be writing at the assigned strike price or one strike higher. You'll only see me write one strike higher in the event, let's say I got assigned Google here at 165 on the Friday session, right? Let's say I had puts last week for 165, and then on the Monday session, Google gaps up to like 169. Well, then I may get a little bit cheeky and write the 167.5s, which is one strike above my 165 assignment. But other than that, I'm usually always writing at the exact assigned price, unless it gaps up the following Monday. Then I might go one strike higher just to get a little bit of that share appreciation, right? So that's pretty much everything for the strategy rules. As I said, if you want a more detailed rundown of these rules, the link to the 30-minute video of the strategy is down there in the description on the channel. So now, guys, let's get into the top 5 options plays, shall we? So moving into the first one, guys, it's going to be Google. We just had it up on the chart, and this week, guys, you have a ton of high conviction stocks for me. I'm just sharing my ideas, right? Very excited for this week. So the first one is Google. Obviously, the DOJ news. I've touched upon it on many videos over the course of this week. I do believe short form summary of everything, right? I acknowledge the problems. In my opinion, the reward is more favorable than the risk right now, so I'm willing to take this bet. That being said, Google, the expected move for the week is 161.11, and we're coming into the previous big zone of support that we had and the 200 daily moving average. Even on the weekly, you can see the weekly, very nice area of support, and the 50 weekly EMA, a decent support level for every single time Google is in a bull market, is coming up there as well. So decent area to bid for myself. That being said, let's go shopping. We just had them up, right? If we're going shopping for below 161, well, you can see there's only $2.50 strike increments. So it has to be either the 162.5s or the 160s. Now, the 160s do not have enough premium. You would need to see at least 80 cents right here. If you're a little bit more aggressive with it and you love Google down here, you can possibly go with the 162.5s. But for all you patient and conservative bulls out there, if Google has another decline on the Monday session, comes down into the 163, high 162s, that will probably free up, guys, the 160 strike. And if for whatever which reason, Google has another disastrous day on the Monday session and comes down below the expected move in one clean shot, you may even be able to get the 157.5s. So you want to be dynamic with your strike selection. Depending on the size of the move down, you want to adjust lower and lower while still getting your 0.5% rule. Hopefully that makes sense. So that is the trade on Google. You can use GOOGL or you can use GOOG. The difference between the two is just the voting rights of the shares. The GOOGL gets the voting rights. These do not. And the price is slightly different. So just if you're trading GOOG, just adjust your price targets with exactly what I just said, right? So that is stock number 1. Stock number 2 is going to be another high conviction stock for me, and that is going to be Uber. I like Uber for a number of different reasons. The first one, of course, is the valuation. The second reason right now is because of the sheer expansion that they'll be having on EPS over the next coming years and the revenue expansion over the next coming years as well. And the fact that we are currently in a nice support area, guys, that's been holding up pretty much since the month of June, right? Looking pretty good right now in an area of consolidation. And in my opinion, the maximum drawdown for Uber in the event that things turn sour could maybe only be down into the mid 60s before you start getting more institutional bids. So I continue to like Uber in this range. That being said, 69.59 is the expected move on Uber right now. Let's go shopping on Uber and see if we can find any good premium below 69.59, shall we? So do I have it on my quick list right there? No, so let's pull it up together. So Uber, taking a look. Now, in terms of these short puts on Uber, as we can see right now, the 69s not giving enough money. How much money would you need, guys? Quick mental math. Half of 70 in your head is 35. You need to see 35 cents on the bid right here for the 0.5% rule. So there's not quite enough, right? 70 is up for consideration, but it's still a little bit too close for me and above the expected move. So if Uber comes down a little bit on the Monday session, that will most likely free up a few of these strikes. The 69s, the 68s, maybe even the 67s, depending on the size of the move down. So at a first glance, I like one of these three strikes. 70 if you're a little bit more aggressive, but 69 to 67 in all reality is my preferred range. So if we come down there and these strikes open up, I'll remind you need to see at least 35 cents on the bid to be worth it. Those are the ones that I will be going for on one of my favorite long-term hold companies. I have this one in my long-term portfolio as well, and I do like swing trading it using the wheel strategy as well when we come down into very decent levels, especially with the valuation. Stock number 3 is going to be another one of my favorite stocks in the market right now, and this one is pulling one of my favorite setups as well. This is a monthly uptrend, but more specifically a monthly breakout, possible retest of the prior all-time highs and run. After 6 months of consolidation, we got the breakout. Admittedly, the monthly candle is not looking so hot, but I wouldn't be too concerned about Amazon, guys. The fundamentals of the business right now are extremely good. The PEG ratio is very cheap right now. And if you look at the fundamentals, look at this EPS expansion, guys. Amazon is doing something that they've never done before. They are focusing on bottom line net margins and on EPS expansion moving forward. They have pretty much built out everything they needed to be built out during 2020 to 2022 when financing was cheap. They built a bunch of extra warehouses for their retail business, a bunch of extra warehouses for their AWS server hosting business, and now it's all about the focus on profits. Revenue ramp should be very decent as well. And look at the price targets of Amazon. The midpoint is about $235 by the end of next year. All analysts are bullish, and I do remain bullish as well. We covered their earnings. Their earnings were fantastic. Now what you're seeing is just a little bit of normal consolidation. Weekly uptrends looking nice. Breakout, possible retest of the 190s, and maybe due for another leg higher. So during this retest is exactly when I'm going to be looking to position. The expected move is 192.22. So let's go shopping on Amazon. Can we find anything down below here in maybe the 190 range, right? So let's go shopping on Amazon together. Pull up the options chain while it comes up. Let me do a quick little coffee sip. Thank you for your patience. So moving on to Amazon now, guys. Take a look right here, right? The 190s, well, half of 190 in your head, not a very easy one. It's 95, right? So 190s are not paying the required premium. What is paying the required premium is the 192.50s. So 192.50s is literally right around the expected move. However, in the event that we do get a little bit of drop continuation on the Monday session, let's say it comes down 196, 195, little 1% drop is all you would need for that one. That is going to free up the 190 strike, which is my desired strike. Full disclaimer, guys, I am already in this one. I took this position last week when Amazon was dropping. I'm already in. As you can see right here, I went with the 192.5s and I got $1.15 for them. Right now, the premium is slightly less than that, but still relatively good. So I'm already in, but if you want to be more conservative and below the expected move, I would possibly wait for maybe the 190s. And if the Amazon really comes down hard Monday and Tuesday, you could even maybe get the 187.5s. So for me, it's one of these two strikes, 190 and 187.5 is going to be the desired range for Amazon. This nice little prior resistance range, which should be acting as current support for the bulls. So that is trade number 3. Trade number 4 is another stock that had its fair share of volatility last week. There was a big short report that came out on it questioning their accounting practices, inventory management practices, import fees on the products that they do manage. And the company basically came out and essentially destroyed all the short seller report claims, right? So that being said, ELF is kind of through the volatility, and I've been bringing up this one on the channel for a few weeks in a row now because it has one of my favorite setups, guys. This is a weekly trend change. After so much downside from the month of July, look at the weekly MACD. Look at that cross down there. The cross is coming, bullish momentum in the stock, and daily uptrend is now set. As you can see, came back down, tested the moving averages. The short report candle got gobbled up entirely. I don't know if you can see it, but it's this little wick right here. Got absolutely gobbled up, and we may be looking for the expansion, and ELF usually gives a ton of premium because it's such a volatile stock. That being said, the expected move is 117.51 on ELF. Love this company. The valuation is relatively cheap, and they have something, guys. They have a decent moat. Not only do they have pricing power in this current environment, the business model is perfectly suited to a consumer that's more picky about their spending habits, right? Elf Beauty's business model is entirely online. They don't have the overhead that companies like L'Oreal, companies like Ulta Beauty have, companies like Estee Lauder have. They do not have physical stores. You can find their products in physical stores, such as in Target, Walmart, and a few other pharmacy stores. But other than that, the overhead of the business, the expense profile of the business is low, and they provide a premium product at a very cheap price. So you can obviously understand that it's been extremely, extremely popular with the crowds ranging anywhere from 15 years old all the way up to 35, 40 years old as well. They're doing a great job at targeting the younger demographic, and they love their brand. So they have pricing power and they have high amounts of brand loyalty, which is why I do want to bid these dips on this fantastic stock, in my opinion. That's just my opinion. If you don't like the stock, none of this is financial advice anyways. Feel free to just not take the play, right? Expected move, 117.51. Let's go shopping for some Elf Beauty below that level, shall we? So you'll see what I mean when I talk about Elf Beauty giving really good premiums, right? Look at these premiums for the week. I'll just put it on all moneyness right here. The expected move, guys, is 117.51. That's already 7% to the downside. Look at all the premium you can get even lower than that. Look where the 0.5% rule comes into play. The 108s are paying 0.5%. So you can get well below the expected move, deeper into the support range down here, and have a very big margin of safety. So that's why I like Elf Beauty. So at a first glance, depending on how aggressive or how conservative you are, you can go below the expected move. I like this following range, 112 down to 108. And suffice to say, if Elf Beauty has a drop of the Monday or Tuesday session, you'll be able to even get even better premium, the 105s or maybe even below. Last Friday, before with a little bit of a rally here, a few of the members in my Discord, because we have been playing this one intensely as well, a few members were able to get all the way down here to the 102s, 101s, and their contracts are already 50% profitable or more. So just keep that in mind. Elf Beauty gives a great margin of safety, which is why I still do like playing this one. That's stock number 4. Stock number 5 is going to be a multitude of various semiconductor plays. I will give you the one that I'm looking for, but I'll throw you out several examples of other ones that you'll play. I'll only give the expected move and the data on NVIDIA, but you can take what I'm doing right now and apply it to your favorite semiconductor stock, right? So NVIDIA, love this one. Their earnings were absolutely fantastic. And the reason that they're down after earnings, as I explained on the channel when we did a review of their earnings, is simply their prior numbers are their own worst enemy. They are a victim of their prior success. They're still growing at a fantastic rate, 70% year over year, but it's not the same growth rates as back here, 200%, 150% year over year. But still, NVIDIA, guys, the demand is excessively strong right now. Still one of the best stocks in the market. So I'm looking forward to play any single pullback that the stock can possibly offer us, right? Beautiful weekly uptrend right now. And in the event we consolidate a little bit more, there's some great areas of prior resistance, which should be newfound support for the stock for the good old breakout, retest, and possibly run trade. So NVIDIA is top of the watch list for this week. I'll be looking possibly for short puts in the 130 to 125 area if we can get it. That being said, NVIDIA has a little bit less volatility nowadays than it does have when it's rallying in a tremendous fashion. When it goes sideways for 3 weeks, you kind of get a drop off in the vol. But that's perfectly fine. Expected move is 137 to the downside. So let's go shopping for some NVIDIA options and see if we can get better than 137s for getting a decent bit of ROI as well. So take a look at NVIDIA. Taking a look at NVIDIA, as you can see, the 0.5% rule comes in pretty much at the expected move. 136, right, is about 75 cents. You go lower than that, you don't get the exact required premium. Although the 135s are not bad for 62 cents, you'd need to see at least, let's call it 67, 68 cents here if you're really penny pinching. Excuse me, for the 0.5% rule. So that being said here, guys, 135s, not too bad. 136, 135 at a first glance. However, in the event we get a furtherance of the drop on the Monday or Tuesday session and NVIDIA pulls down 140, 139, 138 type of thing, well, then you'll probably be able to find some premium in the lower 130s. So essentially what I'm saying is this week, I'll be a little bit patient with it and I'm going to look as low as I can possibly get, 135 down to 130. I would not mind being assigned some shares of NVIDIA down there, guys. I will hold them because I do think that a nice little pop and rally is coming maybe in the month of December, as we do have favorable seasonality of the markets, right? I'll move myself over, but you can see that once the volatility of the mid-November session is done, you usually get the last week of rally, Thanksgiving week, and then December is usually a pretty good month in the markets, right? So that's the trade on NVIDIA. A few other ones, a lot of semiconductor plays are up for grabs, right? AMD, I'm not going to be giving you guys the expected move, but AMD, if you can find something down below here in the, mid to high 120s, 125, 126, 127, could be quite interesting. Decent area of support down there for AMD. On semiconductor, on semi, so this one as well, we played this one a ton over the course of the year, still in a very nice support range, guys, and you do get some good premium on this, 66, 65, 64, always an opportunity on on semiconductor, right? The other ones, LRCX is in a great level of support right now, as you can see right here on the weekly time frame, anything, from here, 70 down to about 64, as low as you can get. Close to the 200 weekly moving average, not a bad opportunity there as well. And even a stock like Micron has been finding some levels of support, but if ever you can find in the mid to low $90 range for Micron, decent bet there as well. So all of those are kind of on my watch list, and depending which ones fall the most, I will go for those. I have a heavy penchant for NVIDIA and TSMC right now, but if ever any of these other kind of secondary plays open up, I'm always in tune to be able to play those as well. So that's just the last semiconductor trade for the top 5 options plays. Now, in terms of the bonus plays, guys, there's so many bonus plays in the market right now. It just all depends how you want to play them. BITX, if we do get a Bitcoin pullback early this week, I'll be looking to play BITX, but with a wide margin of safety. I usually like to go about 20% away, because that's how far you can actually get some premium on BITX. The premiums on BITX are absolutely crazy. So if we're expecting maximum a 10% down move on Bitcoin, well, you could possibly even get a more than 10%, 20% almost move down on BITX, right? The current share price right now is 64. 20% off is 64, is roughly 52-ish, right? And you can see right here, 52s, they're still giving over 1% in weekly premium. Lower than that, you can be even more safe and get even more of a discount. So BITX is one that I do like playing for the short put wheel on the Monday or Tuesday session. Another good stock could possibly be something like an SOXL if you want to take the additional risk. SOXL giving some great premiums down there. So SOXL, if you're expecting a semiconductor rally and you want to play this one with a good margin of safety, SOXL usually offers, the 0.5% rule is way below the markets. So that's another interesting one. Another fantastic one, if you want to take the risk for it, SMCI usually has a very wide margin of safety. This is a more aggressive play, but, take a look at the SMCI premiums right here, right? Obviously a very risky play. However, if you're just playing it for premium and you don't mind being assigned at these lower levels and you give yourself a wide buffer of safety, look how far down you can actually go on this SMCI chain. Obviously, guys, it has its risks. I know. I've said it on the channel myself, right? You can go all the way down to the $22 strike, guys. $22 strike for a weekly contract paying 0.5%. So I love these ones that have a lot of risk, a lot of volatility, and whereby, down to 22, what would that be, guys? That would be roughly a 32% move in a single week. It can happen, but it's somewhat unlikely, right? So I'll continue to play those lopsided bets. And the more conservative things, well, obviously you have some stocks like UPS. UPS, I do really like them. If ever we can find some premium down here, 130 down to 125, not a bad value proposition for a stock that's coming into its 2017, 2018 resistance prior highs, now acting as support. And UPS, the business model, is now rounding the corner of its cyclicality. So I like this one a lot. Another one up for consideration is Airbnb, high quality, high conviction stock for me in the event we revisit the lower 130s, and it provides opportunity for entry. 130 down to 125, decent level to be bidding such a nice stock. This one's lagging, right? A lot of other travel stocks, Expedia, Booking Holdings, right? Those are all rocketing to the upside. Marriott, some of the more solid hotel plays with franchise business models. Hilton Holdings as well. So Airbnb is kind of a laggard, and I do like playing the lagging plays. Coca-Cola is another one. We've been shouting it out on the channel for a while. If you get the retest down here, daily higher lows for the trend continuation, possibly come down lower, you may be able to bid some short put premium down there on Coca-Cola. Same concept for Pepsi as well. Pepsi, decent little play available right now, guys, on Pepsi. Long-term support range of the last 2 years. So I do like playing Pepsi, a little bit more aggressive in these levels, but you need avoid the big red days because the IV on the contracts is very small. You need to be almost on top of the share price when you take this trade. Alibaba is another one of my favorite names, obviously out of favor right now because of the stimulus news in China, because of the Trump tariff risk, but we're coming into a juicy level for Baba, guys. 80 to 75 once again. And the fundamentals, I didn't cover them on the channel, but I looked over the earnings. Record profits for the stock on their earnings about 2 short weeks ago. Daily oversold condition. So this is starting to be when I want to start to bid, guys. After 3 weeks of destruction, daily oversold conditions, and earnings that showed that they're printing money, this company, guys. And the valuation is super cheap. I do like this one as well. A stock like NVO as well. NVO's been out of favor because of the RFK nomination for health secretary for Trump. We're coming down into my desired strike price range, 98 down to about 90 bucks. Keep an eye on this one. Could be an interesting play in those levels as well. And those are pretty much a lot of the ones that I'm looking at, right? Obviously, there's so many more plays I can bring up, guys. New holdings on a big drop could be interesting down here. $13 range. I'm always looking out for stocks like SoFi. If SoFi gets a very big pullback, could be interesting down here. Big pullback. They have some very good volatility now. Can maybe find some premium in the 13s, 1250s. Not a bad idea. Palantir as well. If Palantir for some reason comes down a lot over the next 2 weeks, I'll be looking down here in the mid 50 range. Tons and tons of opportunities to keep on the watch list. So those are just a few of the bonus plays. So maybe you guys can get inspired by those. If you didn't find a play there, well, maybe it made you think of another stock that you're willing to look at. So that's pretty much everything for me today, guys. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these videos every single Sunday night in preparation for the upcoming week. And in the event you have any questions about the strategy, guys, please feel free to leave them down below in the comment section. I will be more than happy to answer you as well. And in the event that you guys want all of these trades in real time, here's the weekly recaps. As you can see, fairly good weeks, right? In terms of just the wheel trades, I do a lot of other things. I don't only sell options. There's tons of call options in here as well. So if you're looking for all of these trades here in real time, guys, the link to the description is down below. You get all of these trades in real time, the private morning live streams every morning, Monday through Friday, 9:30 through about 11 a.m., all of my trade ideas, the call options, the long-term share portfolio positions, the call debit spreads, tons of different stuffs. And if you want to ask me all throughout the day about your plays and your options plays and have my opinion, well, then that is obviously a service that I do offer as well, and tons more private videos and all that good stuff. You see all the things right here, right? So if that interests you guys, the link to the Discord is down below in the description. So hopefully I see you in there soon. And if not, well, I guess I'll see you back on the channel. So take care, guys. Have a great rest of your Sunday night and have a great week of trading in the markets. I will see you tomorrow after the close for the Monday morning recap. Take care and peace.